Market review, reviewing macros. Let's get into it. Example number one, we're looking at price action from January 28th, NASDAQ's 1 minute time frame here. And as you can see, we're going to be dissecting this 9:50 a.m. macro. So as you guys typically know, with macros in general in my model, macro power of 3, for the best long scenarios, I do want to see a swing low swept. I often get the question, when can we expect a spooling macro? Or in other words, when do we not want to see a swing low swept and we want to see price just run to our target, to the opposing side of the range, whatever we're looking for as a price objective. So as we can see here, there's a couple things that I want to kind of set the stage with, where this is 9:30 open if you follow my cursor. Before that, we have a buy side liquidity pool right here, residing right above these orange lines. Like one of my previous videos, that is just a new day opening gap. We see the new day opening gap high here, the new day opening gap low here. Okay, so we know, we discussed in the last video, the new day opening gap in and of itself can be a draw on liquidity. This is another great depiction of that. And then you couple it with a bullish market and buy side liquidity pools, you can get your directional bias, you can get great price objectives. So again, we see price upon 9:30 open, leave behind the buy side, deliver away from the new day opening gap, and then we see it displace lower. But what is it doing? And this is important for the spooling macro. It is running a session low. It's running Asia low, and that is happening before the 9:50 macro. Okay, just adding confluence. Where do the best long setups occur? Below 9:30 opening price. So we see that here. And now after we purge key liquidity pools, a session low, a session high, we want to ask ourselves, is there order flow suggesting a continuation lower in this case, or do we start to see reversal signatures here on this 1 minute time frame? So again, what is that reversal signature initially? Well, we enter the macro window right here, macro opening price dragged across, and then I look to the left side where we're seeing a SIBI right here that was used to send us lower. So we're still seeing bearish delivery there. We saw bearish delivery out of this SIBI that pushed us lower here. We saw bearish delivery rejection off of the 9:30 fair value gap here. So for the opening portion leading up into the 9:50 macro, we saw bearish signatures. So if we're hunting a reversal, knowing that we just ran a session low and we have the new day opening gap with buy side liquidity pools above us, we want to see, can we close above these premium inefficiencies to confirm a change in the state of delivery? That's what occurs here. We see this SIBI that was used to push us lower gets closed above. Step 2, this SIBI that was also used to push us lower gets closed above. 9:30 fair value gap, very significant inefficiency that was used to push us lower, gets closed above, and we expand to the opening range high, to the top of the new day opening gap in the buy side liquidity pool. So again, this is all about being patient throughout the opening range. Let the market show you an initial state of delivery, and then if there's reason to expect price to return and reverse higher, i.e. buy side liquidity pools, relative equal highs, a new day opening gap, whatever is in play for that particular session, then you start to look for these reversal signatures and this change in the state of delivery. If we progress further here, we're looking at that same opening range here, but we're on the S&P. I want to break it down further because I did kind of like S&P's delivery and entry better. We have, again, our buy side liquidity pool. Very similarly, we have the new day opening gap high, new day opening gap low here on ES. 9:30 open, we displace lower, running out London low, running out Asia low, all ahead of the 9:50 macro. And as we can see here again, we don't go down and sweep a swing low. So if we're completing major objectives before the macro, and then at the start and or during the macro window, we start to see a close above, in this case, a SIBI turned macro bullish inversion. That's when we'd want to see a spooling macro. Right now, the spooling macros come with experience and they are a little more difficult to anticipate, but this is when you want to see that occur, right? When we complete and sweep session lows, session highs, if we were looking for a bearish reversal, and then we enter that macro window and just continue to close above objective. So again, we see a SIBI here, that's a bearish fair value gap. If we were truly bearish after we run 2 session lows, would we want to see price just come back up into it and have no trouble closing above during a macro? Of course not. We do that same thing here with this SIBI that was used to send us lower, change in the state of delivery, further confirmation of bullish order flow. This SIBI here not marked out, but we see that close above. And then this 930 fair value gap, that get closed above as well. And little additional signature here. When we have the 930 fair value gap coupled with the new day opening gap low, this orange line as well, that becomes an extremely significant area in price. So again, upon 930 open, we saw it was used on the sell side of the curve. And then as we retest it, this candle's close to the right of my cursor here is very significant and increases the likelihood of us actually delivering to the new day opening gap high and ultimately this buy side liquidity pool up here. Okay, so this was a good example of a spooling macro. If we continue forward, we're going to go to the afternoon session. Okay, now we're looking at NASDAQ's 1 minute time frame, and this is a great example of macro power of three. So the last two examples we saw spooling macro, and this is what we're probably more familiar with, you guys watching, and even myself. I prefer these types of trades when we do get this manipulation. So let's break this down here. We have lunch high, a session high. We have some internal liquidity here, buy side liquidity, swing high, and then we see price right before the macro window leave a signature. Now, what is this signature? These relative equal lows, right? So this is why macro manipulation is so important, and it ties in with just being patient, right? If you see price, if you have a bullish bias and you're trying to get price up to lunch high, that's your target, it's going to feel like in this moment ahead of the macro, price is just going to run away with you, right? But we create these relative equal lows right before macro's opening price here. So you can see right here where my cursor is and I drag out MO, macro opening price. Price is leaving engineered sell side liquidity, right? Trapping early longs to put their stop losses below here. Price comes down, and what is it doing here? Trapping shorts on a breakout trade and taking out early longs, okay? So ultimately, longs had the direction correct up to this lunch high, but they don't understand the value of time and macro manipulation. Okay, so we see us go below macro opening price. We see us run sell side liquidity. That's our macro power of three long entry criteria. This is exactly what we want to see. Then after we see this manipulation phase, we just look back at the left side of the curve and say, what was utilized to send us lower? We have this bearish fair value gap here, or SIBI, that was used to send us lower. Close above, that makes it a high probability bullish inversion. We expand higher nicely. We're just looking back at the left side of the curve again. This SIBI, same logic, used to send us lower here, used to send us lower here for macro manipulation, change in the state of delivery with this close above. It's a high probability bullish inversion. We see the bodies respected here, breakaway gap right here, relative to this high probability bullish inversion. That's your smoke screen. Very good move here. Very good depiction of multiple things in play. But with macro power of three at its core, this is exactly what you want to see. Relative equal lows, or equal lows, of course, built before a macro window, right? That's long inducement. We wait and we're rewarded for our patience when price does go down there below macro open and run these lows. And then you're looking for your reversal signatures. Again, that's just a closure above this SIBI that was initially utilized to send us lower. Very, very good move. Let's continue forward. And we're looking at S&P. Same thing as before from the morning session. I want to break down ES's 1:50 p.m. macro to reinforce the logic and the way that we engage with price here. So lunch high here. Look at these equal highs where my cursor is right here. Then we see price ahead of the macro come down, relative equal lows, reject off this SIBI. There's our checklist right there, running this sell side liquidity pool. We have liquidity sweep below macro opening price. This SIBI used to send us lower, close above, high probability bullish inversion. Same thing as NASDAQ. Look at the left side of the curve. What was used to send us lower? Well, this fair value gap here. This should support price if we get above it. Look at what we do there. Same thing up here. We run those equal highs. SIBI used to send us lower, close above, come down to the exact high of that inversion, deliver to lunch high. Okay, so again, time and price, time. I know on this channel, often I sound like a broken record, but it's because you don't need to be a master at everything. It's because we want to make it as simple as possible, right? We want to become a master at these macro windows when we have a clear draw on liquidity and we see these clear reversal signatures. So as always, I hope you guys like this video. If you have any other questions, let me know in the comments and I will talk with everybody soon.